Good afternoon, everyone. Welcome to the Impact of COVID-19 on the SADC region webinar. This is our 8th webinar in our COVID-19 Impact on African Real Estate series, and the first of 2 webinars for this week. Last week, we focused on the hotels and hospitality sector, and this week we'll be looking at the specific regional impact of the pandemic, starting with today's session, which is focused on the SADC region. Before we introduce the panel, I would like to thank our headline sponsor, Standard Bank, and our series sponsor, Nedbank, for allowing us to make these sessions happen. We are very fortunate today to have an excellent panel with representation from Botswana, Mozambique, Zambia, and Zimbabwe. I would now like to introduce them. Moderating and setting the scene for the discussion is Patrick Katabua, Account Director and SADC Hub Lead, Cushman Wakefield, Brole. And our panelists for today, Inutu Zalumis, Co-founder and Managing Director, Pam Golding, Zambia; Gibson Mapfidza, Managing Director, Mashonaland Holdings, Zimbabwe; Manuel Vieira, Chairman, Meridian 32 Group, Mozambique; Simon Goevelus, Senior Transactor, African Regions, Real Estate Finance, Standard Bank; and Sandy Kelly, Managing Director, Town Projects, Botswana. Thank you all for giving up your time today and for providing your insights. For our audience, as always, we encourage you to ask questions to the panelists via the chat function, and we'll do our best to answer as many of these throughout the session. We'll also be conducting polls, which we encourage you to participate in. I would now like to hand over to Patrick, who will set the scene and then dive right into the panel discussion. Thank you and enjoy.
Thank you, Kafir, and good afternoon, everybody, and welcome to this webinar. So for 8 to 10 minutes max, I will be setting the scene around the different topics and items that we will be discussing today. So looking at the impact of COVID-19 from a real estate perspective in our region. So as of last week, Lesotho became the last country to have a confirmed case. So effectively, the entire region now has cases of COVID. And it's quite interesting that the different governments and the different institutions have had different responses to the various cases. Some of the governments, like in DRC, for example, have waived water and electricity payments for all SMMEs. In places like Lesotho, they are looking at giving rent moratoriums to SMMEs who are registered with the local tax authorities and who are up to date with their tax regulations. And the remaining of the countries, our panelists are going to touch on specifics, how the various local authorities have responded to this pandemic. If you look at regional currencies and how the currencies have been performing against the dollar over the last 3 years, sorry that the font is a bit small because it's numerous currencies. But you can see that the Zambian kwacha has been coming under immense pressure already, similarly to the rand. And this pandemic is only going to put more pressure on these currencies. Looking at how the kwanza has been performing as well over the last 3 years, you'd see that the last year it has been under massive pressure. And this will bring about additional complexities when it comes to engaging and confirming lease contracts as well as sale contracts. Pretty much all the stock exchanges on the continent, except for Rwanda and Zimbabwe, have been in negative terrain from a US dollar perspective. These are year-to-date returns. And we foresee that this could become a greater challenge even in the near future as more companies go through financial difficulty. And typically in such situations, we would see money moving from the stock exchange directly into real estate. but with uncertainties around real estate as well, investors really need to look for the specific opportunities that will lie in the near horizon. Making it more real estate specific, these are year-to-date returns for the South African Property Index, which is the dark blue line, and the All Property Index, which is the beige line. And you can see that from the beginning of the year, it was already under a fair amount of pressure. And as soon as the lockdowns were announced, that's when there was a loss of at least 30 to 50% on average on most of the counters. And this has been quite similar for other listed stocks in the region. Looking at typical conversation topics on numerous platforms, you would see that construction, real estate, travel are no longer discussed as they were historically, and it's the likes of food and healthcare that are dominating the majority of discussion platforms. So from a residential perspective as well, this gives us an indication that there's been limited searches for real estate acquisitions, whether it be leasehold or freehold, on online platforms. Due to time constraints, we are unable to go city by city or country by country, but this is from the Google Community Mobility Reports. And what it tells us is, if you look at the trend from end of March until where we are today, there is generally some form of increase closer to the baseline in terms of people going back to their typical location from a workplace perspective. So there's a lot more people going back to their workplace. The next slide here tells us about the trend of people going back to retail and recreational spaces. In a place like Botswana and South Africa, as soon as lockdowns were announced, there was more than a 50% drop in terms of visit to these spaces. And right now, we're sitting at just above the 40% mark, meaning that there's an improvement or there is an increase in visits to retail and recreational spaces in comparison to where we were late March. So this gives us an indication that in general, communities are visiting these centers a lot more, and there's a general want and there's a general need from different communities to go back to what normal used to look like. Unfortunately, what normal used to look like may not be reality in the short term. This picture gives us an indication of some of the solutions that retail operators are adopting to ensure that customers can still visit their centers whilst adopting social distancing. And not every country is equipped to have these type of solutions, but it may be something that would need to be enforced in the near future. In other places, COVID has, of course, forced us to be very innovative. And some of the startup companies are looking at developing facial recognition-enabled masks. And this is to facilitate access to buildings that utilize facial recognition. This may be, I think, a couple of years ahead for our region, but those that are operating in the intelligent buildings may start leaning towards these type of solutions. And of course, because we're relying a lot more on technology during the whole work from home time, there's been a $1 billion investment that has been proposed to kick off in 2024, or rather to go live in 2024. And that is for the installation of a Africa mega cable, which will facilitate with access to data across the continent. From a workplace readiness perspective, following on from the Google graphics, a lot of companies are looking at bringing staff back into the workplace. Something that Cushman has been developing further is the 6 feet office principles, which are pretty much principles to assist and to guide firms in terms of bringing their staff back to their desks in such a manner that contagion is prevented as well. So I'm going to ask my panelists to switch on their cameras and to switch on their masks, or rather to switch on their mics. The slides were to just give everybody an indication of what we would be touching on, and we will now be opening up to the various panelists to give more specific viewpoints in terms of what is happening in the different jurisdictions. Maybe starting off with yourself, Manuel, in Mozambique, what is the situation like currently, considering the fact that you had already been hit by the oil crash, and now COVID has come in as well to, and it must have affected your economy quite a bit.
Good afternoon, absolutely. So on 1st of April, government implemented the state of emergency. It's on level 3 of 4, so 4 being total lockdown. Level 3, we're only allowed to have a third of the workforce at the office on a rotational basis. So that's significant, and particularly if you consider that connectivity issues we have here are significant. It's been a challenge to adapt. We're currently 6 weeks into it. We hope, from the statistics we have available, that we've had maybe 150 cases and no deaths. We're hoping by 31st of May to go down to a level 2. So it's been significant. We've seen the oil and gas projects on hold for the time being. There are 3 of them. I can refer to them as the Italian, the French, and the American. The Italians are continuing because that's the smallest one. The French are kind of simmering and making a decision, and the Americans have decided to postpone for 2 years.
Right.
So it's quite a significant impact.
I can imagine. And is the lockdown right across the country, or is it specific to the metros?
So we're not at a lockdown. We're in kind of social distancing and restrictions in terms of people going out and about and having to wear masks, but it's countrywide.
Mm-hmm. All right, yeah, Inutu, welcome back. Moving on to your side of the region, what is the situation like currently in Zambia? We seem to have lost there. Gibson, from your end in Zimbabwe?
Yes, Patrick. So we started our total lockdown on the 30th of March. It ran to the 19th of April. And from the 20th of April to 16 May, we were on level 2, which allowed mainly commerce and manufacturing to come back to work, but observing the World Health Organization guidelines. And there was a review over the weekend by the president, and there's encouragement for people to put on the required measures in terms of the masks, the sanitizers, especially for buildings as well. So starting Monday this week, we have seen a considerable amount of people going back to sort of the normal operations, but under strict guidelines in terms of social distancing and putting on the required protective masks and sanitizers.
Right. Now, you run quite a substantial portfolio in Zimbabwe. How has the relationships been with your occupiers during this time, and has government come up with any interventions from a tenant relief perspective?
Okay, thanks, Patrick. So yes, in terms of the first bit of your question, our relationship with our tenants. So basically, our understanding of this pandemic at a global level is to say it has taken away beneficial occupation from tenants. And when a tenant is not operating, it's reasonable to expect that they won't be able to pay the rentals. Otherwise, they will be paying rentals from the balance sheet, which is not sustainable. A rent is a profit and loss or revenue expense. So we have been engaging our tenants, not just us, but I think the entire property industry, especially the commercial one. So engagements have been happening with tenants to sort of see how best we can navigate this scenario. On the 30th of April, coming to your second question, so what was also happening in Zimbabwe after the lockdown is in the residential sector, I would call it even the bottom of the pyramid. This is really your affordable housing, and in Zimbabwe, we normally refer to it as high density or low income. What was happening in that sub-sector of the residential is most landlords were still insisting that their tenants, whether they have the capacity or they don't have the capacity, pay their monthly rentals. And so the government had to intervene on the 30th of April. The government issued statutory instrument 96 of 2020. Basically, this SI created what we now call a protected tenant, specifically for the residential sector. So what it means is during the lockdown period, a tenant is deemed protected if they fail or they choose not to pay their rental. So the owners, so there is no proof to say do they have capacity or they don't have capacity to pay. Simply by not paying, they become a protected tenant. Essentially what it means is the property owner or the house owner, this is just limited to residential, cannot take legal recourse for eviction or penalizing the tenant. When you look at that subsector, I actually think that was a good intervention from the government because you see most landlords in that sector, housing sector, so most of these properties are owner managed as well. And these are owners who have dual motivation over their premises. So they also want to occupy and they also want an investment bid. In most cases, they would be sharing these houses with the tenant. And because of what was happening in that subsector, I think it was a good move by government to put across that SI, which sought to establish security of tenure for that subsector of the economy. But the commercial sector, there has not been any government intervention. Most property owners, especially the listed property owners and also other big property owners, they have been engaging with tenants to sort of understand and bearing in mind that it's very important for collaboration and resilience to exist for the long-term future of both parties.
100%. I think there's a role that needs to be played by the numerous players in our industry in order to make sure that we can ride this wave and at least continue to remain operational whilst different measures are in place to ensure that the spread is somewhat contained. On that note, maybe moving on to you, Simon, from a banking perspective, are there any particular solutions that you are putting in play to reduce the effect that the lockdown has on the industry? If I could ask the other panelists to please go on mute whilst Simon is speaking. There's a bit of background noise.
Thanks, Patrick, and thanks everyone for joining. So yes, Patrick, we do continue to support our key clients through this period. It is a partnership, although everything is looked at and considered on a case-by-case basis with a detailed call it due diligence on expected impact for each of our clients. So it is very much case by case, and anything we do look at has to be taken into consideration with the regulatory impact it may have. The financial services industry is quite heavily regulated, and so any solution we look at must conform and fit within those bounds.
100%. And locally, we've already seen interest rates cut by over 200 basis points, and it seems to be the case as well in many of our neighboring countries and in the region as a whole. This is something that I'm sure would assist a lot of your clients, at least in the short term.
Definitely. So besides just local interest rates, there's also, LIBOR's come down quite significantly in the last few months. So there's quite a significant debt saving for all clients across the board, and it will certainly assist through this period going forward.
Yeah. Inutu, moving on to Zambia, I think already the last 4 or 5 years there had been a lot of reports that the Zambian market was somewhat oversupplied from a retail perspective, and this pandemic put a lot more pressure on trade. Could you take us through what the situation is like on the retail front? You're on mute.
Sorry about that, Patrick.
There we go. Perfect.
Yes, thank you. I was saying that some significant things have happened. Yes, there has been an oversupply across all sectors in terms of the office market as well as the retail. We actually see that with the closure of retail brands such as the Jet and Edcon, that has happened in the market more recently over the last 30 days. And now SPAR supermarkets as well, pulling out of Zambia and looking at a much smaller footprint in terms of franchise stores, has definitely impacted our retail market. There's an increased amount of vacancy that we've seen across all the shopping centers, as tenants, even local tenants, are now struggling to survive. As you know, most of our tenancies are US dollar-backed leases. So coupled with an exchange rate that has had significant depreciation, we're seeing a lot of pressure on rentals.
Right, thank you. And from an office perspective, how do you see that evolving, considering that you already had quite a bit of supply in the market pre-COVID?
Yes, exactly. Pre-COVID, we were looking at significant supply. Right now, we're sitting with over 50,000 square meters of office space that is vacant, that is within Lusaka alone. Right. Which towards mid-2019, we already saw pressure on rentals. We saw that this oversupply began to see the downward pressure of rentals. Average rentals at that time, say Q1 2019, were about $22 per square meter. And we've seen that these have now dropped to averages of about $15 per square meter in the first quarter of 2020. So landlords are now under quite a significant amount of pressure to fill vacancies in this current environment. As I said as well, coupled with the depreciation of the kwacha and subdued economic growth. And now, of course, with COVID in place, one begins to, whether we like it or not, we've got to start rethinking office space and what would be the optimal type of office space post-COVID and during COVID.
No, that's right. I think it's a challenge that we all facing right across the region. Pre-COVID, there was the move around consolidations and centralization of office services. We saw the rise of a lot of serviced office providers. In Sandton alone, there are over 20 noticeable serviced office providers, and it seemed to be a wave that had moved into various capital cities as well. And now that we are forced to adopt the social distancing behaviors, it would be interesting to see how the service office providers also adjust themselves, because they are providing a very much needed service. A lot of the occupiers are looking for flexibility, which these service officers provide. And it would be interesting to see the solutions that will come from this pandemic. Another sector that has obviously been hit very aggressively is the hospitality sector. Manuel, there's been great focus from a hospitality perspective in Mozambique. Travel and tourism being a key contributor to the GDP. How is that currently trading, and how do you see it moving forward?
Yeah, so this is probably the sector that's been the most affected. Occupancies are, if they're not at zero, they're pretty close to zero. It's going to be some time before these guys can get out of the mud they're stuck in now, because the hotels traditionally have quite significant fixed costs. So I expect that the tourism sector is going to delay. It's going to take a while for people to start arriving in the countries. I see a potential for the domestic market. We kind of all locked into our countries right now. We can't leave our geographic boundaries. So I see a significant potential for these tourism-related projects to target the domestic market, which probably hasn't been as well explored as it should be, with the exception maybe of South Africa. It's got a big internal market. But certainly in Mozambique, there's a market to explore the domestic tourist. Moving on from that, the restaurants, they've also been pretty badly affected. Their little bit of salvation has been the takeaway market. So quite a lot of these restaurants are doing takeaway, since their sitting capacity has probably been reduced to less than half. So really my heart goes out to any hotel and restaurant operator at the moment.
Yeah, that's right. I think it's quite interesting that a lot of the operators in South Africa, for example, were prevented from trading as long as they had warm food. But if the food was cold, they were then able to trade, which was quite an anomaly. But we all found a way to just accept it and bear the consequences. Simon, this must bring quite a lot of challenges when it comes to creating robust portfolios from an investor's perspective. So, as a funder, what do you look for, and how would you advise different operators in terms of bulletproofing their portfolios in such times of uncertainties?
Thanks, Patrick. I don't know if you can really bulletproof anything, but so there's a few things I think, and the key thing is that there's an increased strategic focus, I think, going forwards on building this resilience in portfolios and for investors. So, I mean, a few things potentially is maybe diversification away from maybe a full retail into some form of office, or even maybe residential, which has appeared to be quite resilient to date. It's quite interesting compared to the modern or the first world, where asset allocation is done by asset managers and pension funds, institutional investors. Whereas in an African context, and even still in South Africa, we find investors doing, or should we say property owners doing, the asset allocation themselves. It has proven to be quite a key determining factor, especially in the SA space, on diversification in the past, and something I think is going to remain for some time. So I mean, that's one aspect. Lower gearing is potentially another one, building additional fat and cash into the business. Maybe there's a call for more amortization, for reduced refi risk for a number of investors. Potentially maybe even increased deposits from tenants, or a build-up over time for a reserve buffer as such. Maybe to the extent there's another crisis like we're going through now, at least there's, 3 to 6 months cash sitting within both the tenant's business and the investor's business, or they agree to share that in some form. So I think there are a number of triggers or things that can be considered, but generally a common trend is maximum debt is pushed onto any asset at all times, and maybe we need to start moving to something a bit more conservative in the long run to build increased resilience.
Absolutely. I think this crisis has really taught us to be innovative on how deals are structured. bearing in mind that there's a lot of uncertainties in the future, and we need to just find ways to be more resilient when it comes to black swan events such as this one. Kelly, hi, welcome back. Can you hear us?
Yeah, from darkest Botswana. Yeah, sorry about the internet connection. Been trying all sorts of devices. Yeah.
No, excellent. Thank you, and welcome back. Could you maybe take us through how your experiences have been the last few weeks or last few months in connection to engagements with your occupiers, and have you been able to collect rent from them? Have there been a reduction in that in Botswana?
Yeah, Patrick and all the viewers. Yeah, what we did was just ahead of the thing, we drew up a risk register. We categorized them into high, medium, and low risk tenants, obviously thinking that the low risk tenants would be people like the supermarkets and so on, the banks, guys that, and obviously government offices or parastatals or whatever, you got NGOs. The high risk tenants would be things like hair salons, restaurants, and so on, liquor stores that we knew had to close down, small operators. So then kind of halfway through April, for April rentals coming in, we kind of issued some, we kind of issued credit notes to the guys that we knew weren't going to pay, because obviously otherwise we'd have to fork out the VAT and so on. And so the testers come in May to see, who's performing and who's not performing. We're pretty close to what our predictions were. Obviously, we don't want to mention any names here of some of the big guys that we thought might pay at least something, but haven't paid anything. So we'll have to just see how we deal with those. But yeah, I think that the approach that we've taken is, I think in previous webinars and the guys have talked about a symbiotic relationship, which we in pretty much amongst everybody, customers, tenants, banks, and landlords, that we come to realize that we need each other more than anything at this time. So very few of our office tenants have battled. They seem to have been okay. But and industrial tenants, a couple of them have battled, but we really, people like DHL and G4S that we got, they've operated pretty much throughout, so they're okay. But on the retail side, yeah, we think we're also going to there's going to be some casualties at the end of the day. The kind of local traders and small guys, we're going to lose them for good. Hopefully, on the clothing retailer and furniture and so on, when we expect them to come back and hopefully be there. But on the whole, yeah, just it is what it is, we're not going to get what we can't get.
Right. Yeah, I think yeah, as we get casualties on the retail side, it will definitely put pressure from a cash flow perspective. Are you seeing your funders and the banks coming to the party as well in terms of alleviating the cash flow challenges that are being posed by this pandemic?
Yeah, Patrick. Again, early on, we approached all the banks and funders, because we bank with a number of banks, and we supported in our bond program by the institutional bond market, the institutional investors, and pretty much everybody has come to the party and come to the party quite early on. So we're really quite pleased with what the reaction that we've had. Things like Not that we've taken it in all instances, but the banks have offered a moratorium on even paying the interest on loans for 3 months, and some of them are even prepared to go up to 6 months, and a waive for now of capital repayments on amortizing loans. We've got those as well, which is and even from some from bond note holders that we had there. I mean, it's not proprietary information. It's public information for prime time, and for time projects we've had similar good support from the bank. So they're quite understanding.
Yeah. Thanks for that, Kelly. Gibson, on your end, you're in a fairly comfortable position from a cash perspective. Are you still quite keen to introduce a lot more stock into the market, considering where the Zim property cycle is at this point in time?
Thanks, Patrick. Obviously, in terms of new stock, I would see most companies wanting to do that. Partly, it's a part of diversification, but essentially as well, it's a natural process of urban renewal. When you look at our CBD, Harare, Bulawayo, most of the buildings are obsolete, and the market is actually demanding for more modern buildings in terms of the designs, energy efficient, etc. But the challenge we have, and this challenge is not attributed 100% to the pandemic, the COVID pandemic, is even before the pandemic in terms of our economy. So when you look at our GDP, it has been going down in real terms. And what it really means is demand for space also follows the same trend. So when you look at end of 2019, beginning of 2020, our property cycle, I would say maybe we're around, if you look using the clock, we're around 25 minutes to 5. We are in a downturn, and the market sentiment is to say we haven't really reached the bottom of that cycle, the property cycle. So when you look at that position, demand for space is low. And when you then look at new stock in terms of new development, what we are seeing in the market is cost of construction, which is sensitive to inflation. And you may know that our inflation year on year is around 675%. So cost of construction is still is higher than the market value. So market value is really affected by the GDP, which is demand for space and the value of the rentals you get using the capitalization method. So we have a mismatch where new stock would cost you more than the value of the completed development. So in such a scenario, yes, in as much as you may have a pipeline of development to try and diversify your portfolio or renew it, etc., because of that scenario, it's difficult to get board approval for any organization, not just in Zimbabwe. It's as if you are abusing shareholders' money because you are delivering something for $800 and the market value is maybe $60, so it doesn't fly. So I think all those pipelines may have to wait for the economy to correct before they become viable and be practical for them to go ahead. But yes, most companies in Zimbabwe, they have a lot of pipelines, and some of them were aligned to the hospitality industry, which before the COVID pandemic has been very resilient. And we have seen spots like Victoria Falls, Harare, etc. The occupancy levels of most hotels was very good to an extent that it was pointing to scope for more offering on the market.
Right. No, thanks for that, Gimston. Something we don't touch a lot on is the residential market, which was flourishing historically in Zambia. So maybe for you, Inutu, could you take us around what is happening currently on the residential side? You're on mute.
Sorry about that.
There we go.
So for you to get an appreciation of where we are currently, I think it's important for us to see where we are coming from. Yes, the residential rental market was a very attractive market in Zambia, specifically because we have the ability for US dollar-backed leases and a large expatriate portfolio of renters that we would be servicing. So what we've seen is that actually this has now become the most vulnerable part of the residential market in the short term. We see that there's been an increased amount of vacancy as we saw an outflow of a number of expatriates over the period of February, March into April, as the COVID pandemic began to take a life on its own and countries were calling for staff to return back home. Also, we are impacted as well because we are our health infrastructure is not as robust. And so if you're looking at it from an expatriate point of view, in terms of health services, we would not be ranking very highly in terms of what we would do in response to COVID-19. So the challenge that this market actually faces is that even after COVID-19, will the market really come back to what it was before? Because I think for that side of the market, also having experienced working remotely, what we probably will experience is, and this is my personal opinion here, is that we will see a situation where a large number of expatriates who work remotely from home, because that's what's happening right now, with potentially local staff to execute and implement. So there will be pressure then, therefore, on rentals in the expatriate market. As you know, you cannot have your house empty forever. Yeah. So we see some sort of, we see a shift in terms of rentals potentially coming down. Another interesting thing that has happened in the Zambian market is that with the exchange rate, we've actually had expatriates who are in-country resident who previously had US dollar leases are now negotiating for kwacha-based leases. That's another thing that we have seen that's been happening over the last probably 6 weeks.
Right, and that's on the residential side. Do you see that trend moving on to the commercial side as well?
Yes, most definitely. I think what we need to be appreciative of is what's been happening in the market. There will be pressure. There already has been pressure on office space rentals, as I had mentioned earlier. But also, I think in terms of rethinking office space and how it works, we see, because of our subdued economic growth, we do not have a number of large office occupiers, corporate occupiers coming into the market to take up large spaces. We see that most of besides the banks, we've seen that the other larger market is our international NGO market, which are donor-funded projects. And of course, now with COVID-19 and what's happening and the realignment of donor countries in terms of where they see their money is going, it'll be interesting to see where the office space market will now begin to take a turn. And I think this is an opportunity really for landlords to begin to look more at the local office market, as opposed to only looking at the larger international market. So it will put pressure definitely on rentals. Right.
Manuel, Mozambique is also another country where historically US dollar-backed leases were very popular. Do you foresee that this will continue to be relevant in the near future, or will there also be a switch towards adoption to local currency rather?
I think Mozambique adopted maybe 5 years ago a de-dollarization of the economy. So it's become increasingly difficult to come across US dollars being traded openly. We here as a company used to receive cash payments and transfers from abroad in dollars. Today we have very little foreign currency coming in. Everything is done in Mitikaj. So our landlords have seen the same, because it's become very difficult just to get dollars. You imagine somebody like ShopRite their income is in the local currency. At the tills, they charge local Mitical prices. So for them to go to the Reserve Bank or to the bank to buy forex to pay the rent, it's become near impossible. So definitely there's been a trend to move away from dollar-based. The lease is still dollar-based, but the payment will be made at the exchange rate ruling on payment date.
Right. Sandy, maybe this one for you from an investor's perspective. In a place like Zambia, where there has been pressure to convert to local currency, I guess Botswana. But from a landlord perspective, how do you navigate with these nuisances around the exchange rates and the preference from a currency perspective?
Yeah, look, there has been some pressure. Some of the South African retailers there are asking for that, and some of the other office tenants. However, some of them, some of the leases are if you want to go to a kwacha-based lease, then it's quite often dollar indexed. So let's just take, for instance, at the current time. So if one wants to fix that at call it 18-20 kwacha to the dollar, and then let's say once this wave's passed and the Zambian economy improves a little bit and it goes back to 15, are they then going to be happy with that? So one's got to be quite careful with that. The other thing, particularly in Zambia, I'm not sure what the situation is in Mozambique, but with the high cost of kwacha funding, to then match your assets with liabilities, both in terms of tenants and rentals and leases and rentals and funding, and then of course escalation. So is one then going to have let's call it a 10% return on dollar leases in dollars, with an escalation, a dollar escalation of, let's say, somewhere between 0 and 2-3%, often renegotiated as we go, to kwacha leases that have to return you what, 20-25%. It's not likely to happen. So I think there's some challenges that are going to happen there, but it is something that we're going to have to face. And then, of course, what do we do about escalation in kwacha leases? We haven't sort of worked that one out yet,
Yeah. And I think as it was mentioned earlier, I guess that's where there's a big advantage if you had a fair relationship between landlords and tenants, where you can then come up with some form of compromise. There's wild currency fluctuations. We've received a question, well, there's a couple of them that has come through, and API is helping us to select the key ones. I think this one, Simon, will be relevant for you. There's a delegate who is asking, how soon do you think foreign direct real estate investors that have left our countries because of the pandemic would be coming back, and even with more investments in Africa?
How long's a piece of string? Look, I think there's always going to be interest in Africa. It's a high growth continent. And as I think the first world kind of muddies their way through COVID and the appetite picks up again, we'll see a bit more investments coming back into the continent. A lot of it will be country specific, the various growth opportunities for each region and country. But definitely will come back. How long? I'm not quite sure. But probably next year, things will probably start picking up quite significantly. And to the extent countries can deal with COVID quite quickly, maybe even this year still.
Yeah, great. There's another one here. I think Gibson, relating to Zimbabwe, the interest rates have come down from about 40% to 25 or so. Are those figures correct?
Yes, they have come down from between 30 to 40 to 15%, Patrick.
Yeah, okay. So do we foresee them coming down further? And does this equip you for further investments?
Okay, maybe just to give a background to the hike and now them coming down. So the interest rates were hiked sometime last year. I think it was around July, and the central bank really. What was happening at that point is uh, individuals and also some companies were borrowing money from the banks for speculative reasons. Part of it is to buy forex and hedge against losing value. So the whole idea of increasing the cost of money through the interest rate was to try and stem on that, where people borrowing. So the idea was to only allow those who have real projects to borrow money by using the price of money. So the recent reduction by the central bank is a response to the COVID pandemic and allow companies to access cheaper capital. So the expectation is to say banks will also follow. So this is the overnight interest rate, and banks ordinarily they should follow that guideline as well. In a way, yes, that should help. That should help developers in terms of debt financing new projects. But what you also see is even at 15%, cost of capital is still higher than the average returns of the real estate investment. So, but I think going forward, yes, that should assist because even when the interest rates were higher and projects were viable, still developers were accessing bank loans to carry out development, accepting, of course, that your cost of capital is higher than your internal rate of return of those developments. But bearing in mind, of course, that real estate is a long-term investment, and in future you can always correct that mismatch.
Right. Yeah, thanks for that. And do you foresee from a residential perspective, could this reduction in interest rate create some form of greater demand for residential properties in Zim?
So demand for residential has always been there. Of course, in terms of occupiers, of course, you then drill further and say, is this effective demand or is the housing waiting list demand? In most cases, this is not really effective demand. Like you need to say, we also have a considerable amount of expatriates who list the high end, the top of the pyramid. So the connection through interest rates is very indirect, but demand has been there. What will really trigger effective demand, Patrick, in terms of real estate, residential accommodation, is anything that improves the disposable income. And I'm talking here about really GDP. Interest
Yeah.
rate is very indirect. I think we need to see the GDP going up in real terms to sort of increase effective demand in the residential sector.
All right. Thanks for that. We've got another question that came through, retail orientated. So considering the fact that a lot of the retail centers are not visited as frequently as before, could this give rise to a bigger e-commerce industry? Inutu, maybe you could touch on that, considering that there's a lot of, or historically, there was a lot of retail activity in Zambia, and whether there's maybe now room for growth in e-commerce activities.
Yes, I think there is growth opportunity for e-commerce. Whether it will never replace bricks and mortar. That's one thing that will happen, because I think a lot happens within the retail center just beyond shopping. There's the socialization aspect of it. But what we have seen here is definitely innovations around apps that are being developed, laundry apps. You're looking at that rise of e-commerce. I think for a retailer now in a mall, it would only make sense if you have a little bit of both. So you have the bricks and mortar representation in a mall, as well as an online platform for e-commerce as well. Yeah.
Yeah. I think amidst this chaos, there's always opportunity, and the likes of Amazon and Take a Lot have definitely thrived from the challenges that pandemic has caused. Another question that has come through relates to student accommodation. And the question is, how will student accommodation be impacted by COVID-19? And are there any specific stimulus packages provided in this market? I think from a South African perspective, we haven't seen any direct, except for the fact that government did mention that they would provide some form of support to student accommodation providers, but it's still under discussion. In a place like Botswana or Mozambique, Manuel, has there been any intervention in that regard, specifically around student accommodation?
No, all student accommodation here is around the university, being residential facilities offered by the university. We have very little formal student accommodation being offered. People may have a room or two at the back of their house or something like that, but there's nothing structured.
Sandy, from a Botswana perspective?
There is student accommodation provided by the University of Botswana, but also in terms of our student policy here, there's an allowance, a monthly allowance, which is granted to students. So quite often a student would prefer to take the allowance and find his own accommodation. But what's happened since COVID-19 is pretty much all students have gone home to their home villages and outlying areas. And so I'm not entirely sure whether those allowances have been forthcoming throughout during this time. But the universities and schools are obviously closed, so it'll be some time before they make their way back to the campuses and so on. But in the meantime, the hostels at the UB are closed, so there's nobody there.
Yeah, thank you. There's another question from Botswana here, where they ask, what will the future of office look like, considering that work from home has become a concept that we have embraced? Maybe Sandy, we can start off with you on that regard.
Yeah, look, I think that we are, to a large extent, there's a number of us that are fairly privileged amongst us all on the screen and those listening and watching, that we have, albeit that I was a bit challenged at the start here with our devices and internet, but in Africa we are catering for the masses. So in Africa, probably most Africans on the continent have a cell phone, and some of them too, but very few of them would have a smartphone. So what we have found, even amongst our own staff, when we sent them home the week before the shutdown, we had to go and procure another half a dozen computers. Laptops were sold out, but we didn't want laptops anyway because they can grow legs and walk. So those our staff took those home, but even those that were taking them home, is the internet strong enough? As you saw earlier with me, it was a bit challenging, yeah, and that exists through the vast part of Africa. So we honestly don't see the working from home thing going to work very well, although our staff did manage, and other staff did manage throughout. But it's a long way off compared to the situation that one will find, let's say, in London, where people only come in for 3-4 days a week and are able to work from home. That's not going to happen. Apart from that, Patrick and I had a chat yesterday. Is that we are all social animals, and we do want to get up and go and have a chat and have a cup of coffee with somebody. That's what we are made for. You know, we like all animals. We like to get together and so on. So I think working from home as a norm is a long way off from where we are now.
Yeah, Inutu, you're in a very people-facing industry, and you have to physically show customers the stock that you operate. What's your view on work from home, and how is that impacting your operations? You're on mute, Inutu.
Sorry, Patrick, I'm being a good girl, always being on mute. I'm of a similar view to yours and Sandy's. We are social people, and I think in our African setting, going to the office is part of our form of socialization. So when you look at our industry, which really relies on taking people to view properties, whether it is residential, commercial, industrial, or retail, despite having the innovations available, like a virtual tour of a property, you cannot replace the feeling of walking through and visualization, because actually you have clients who struggle to visualize a space if they're only looking at it through a virtual tour. So but what we have seen on the other hand is that with the COVID outbreak, people have been less and less desirable, for lack of a better word, to actually go and do a physical viewing. So a lot of assurance has to be had that, staff are wearing masks, we've got the relevant hand sanitizers. We did have a situation where staff worked from home, in Zambia we did not have a lockdown. First and foremost, we had an encouragement, but it was not a mandatory stay home, stay safe. It wasn't mandatory. So people are at work, but under very, very limited movement. The mobility has come down considerably. So in terms of how it has impacted, it has slowed down the level of transactions that are happening on the market in terms of rental as well as sales. We have seen an immediate impact. We began to feel it in April, where we saw a slowdown as people are looking to see whether they should actually proceed with either a rental or a purchase. So we saw that slowdown, but we expect the market to come back, because people will not remain at home forever.
Yeah.
Even 3 to 6 months, people will come back, unless we have a situation where in Zambia, COVID-19 infections and deaths spiral out of control, and hopefully not, because the relevant measures are being taken into consideration.
Yeah, I think the intention really is to ensure that the countries that have already had the first wave do not get into a situation where there's the second wave now of the virus that comes through. And in terms of working from home, I guess it also boils down to productivity and whether the staff is more productive away from your traditional office space, or whether they'll be more productive from the office. So far from research that has been done and from the reports that we've had, it shows that at least 90% of staff would be more productive at their traditional space of work. So it would be quite interesting to see whether that percentage would change as staff members get equipped to work away from the office. But what is true is that you do get a lot more done when you've got that physical interaction, especially in our industry. So we've reached the top of the hour. I'm going to ask the different panelists to wrap up with just final comments around how you see the sector coming out of this, and how long you think it will somewhat take for it to normalize. Some reports are saying that we may need to adopt social distancing and the likes for at least 12 to 15 months. But I guess it really depends on how we contain the spread. So maybe, Simon, starting with you, concluding remarks.
Thanks, Patrick. Maybe just to jump on a bit to what Sandy and Anita have said around work from home. Also, I don't think it's going to work just yet from an all-time perspective, given the lack of infrastructure, or should we say modernized infrastructure to cater for that. So that will take some time. Retail, I agree with Anita, we're very much a social being, as well as Sandy on that. And we have a very strong shopping mall culture in the region. So as much as there is social distancing that will probably still take place for a while, I still see quite a lot of people to go back to shopping malls as soon as lockdown restrictions lift even more. And who knows, maybe in 12, 18 months, we'll look back as it was just a flu. It has been quite significant, but I do think we'll go back to a very strong shopping mall culture, and it'll take a while for the e-commerce or online retailing to really catch up, like we see in America, for example.
Thanks, Simon, for those points.
Thanks, Patrick.
You're on mute. Some words of wisdom from Zimbabwe.
I guess I'm following Inu to go on mute. So 2 points from me, Patrick. The first one, so in every bad thing, there's a positive thing. So when I look at SADC, the biggest worry for me is if you look at their GDP in terms of the 3 key sectors, agriculture, manufacturing, and services. We, from the 90s, we've pushed our GDP or our economic activity from agriculture, which was good, to services. So if you look at South Africa, for instance, their agriculture is at 2%, manufacturing 25%, services 61%. So that trend, you look at Zimbabwe, agriculture 12%, industry 22%, services 65%. We have this overweight in services. And when you look at the COVID-19 pandemic, the countries which are hit most are those who have services. And the reason is very simple. You can't exclude services. For service, when you're selling a service, you need conduct, like your restaurant in Cape Town, you need conduct to sell the service to the person. But with manufacturing, so if you look at China, they are doing well because they are 70% of their GDP is coming from manufacturing. So they are still able to export a lot of things. So I think for me, the first thing is to say this is a lesson for SADC and other African countries to say we over-pushed our economic activity from agriculture. We need to come back to manufacturing. So that's the first thing. Then the second one, looking at this pandemic and to say what is the next normal. For me, I think the real estate sector has to reinvent itself and become more competitive. Health and safety in buildings is very key, ensuring that so what we need to do in the offices is to look at the home working. You mentioned productivity, and I totally agree. How do you increase productivity in offices? So you're a landlord, what else can you do for your tenants to ensure that you achieve productivity? So I think the second one is to ensure that we reinvent, we are creative, and ensure that we provide more facilities, functionality in offices, and still enable more productivity to occur in offices. And health and safety policies are very key going forward. Thanks.
100%. I fully agree with that. And considering the amount of vacant space that would be present in our markets, we will really need to find ways to be innovative and creative to utilize the space and to ensure that it becomes functional for new requirements that society may have. Inutu, from your side, concluding remarks? You're on mute.
I think on my end, I think on the office space market, when you look at what we're probably going to be looking at is a different, I think developers now in that space as well as occupiers will look at probably a different kind of footprint, doing away with the traditional boardroom type of setup, type of offices. I mean, even look at, when we look at the open plan style of office, one would now have to really rethink in terms of a layout perspective. How do you lay out your open plan offices? I mean, people cannot necessarily go to work with visors and masks. So I think it will put quite a bit of pressure in terms of how best one can look at their office space, not just from a space planning point of view, but I think also from a design for developers as they bring product onto the market post-COVID. How will we survive during this time? I think it's a very difficult thing to come up with a long-term solution. And I think there is a lot of pressure, especially from tenants, looking for long-term solutions in what could be a short-term situation. So for one to be able to balance and understand that, you know, from a landlord perspective, probably temporary reliefs for now, from a financing perspective as well, but you're able to use this as this is going to be the status quo for the next, and we need to renegotiate our leases for the next 5 to 10 years. That I think would be an unfair perspective. But of course, people need short-term solutions for now. On the residential side, we will see resilience from the local rental market. That will be resilient. As we know, it is expensive to purchase a home in most of sub-Saharan Africa, the level of interest rates. So we'll see a lot of play there in the local rental market. We'll also see a shift of those who dependent mostly on expatriate rentals to look at conversions of houses into office space or actually market them out to the local market. And I think people will, to a certain degree, and what we've seen in our interactions with the market is that people will get comfortable in an office space that they seem to be more in control of. So we'll see a little bit of a shift in the short term, but I'm hopeful that normality will come back to the market in the next 6 to 12 months.
Yeah, and it would be interesting to see what normality would look like, because it's quite challenging to determine what the new normal is. It seems to be evolving over time as we become more familiar with this virus. But thank you for those points. Manuel, some wise final words from your side? You're on mute as well.
Sorry about that.
There we go.
I think across all segments, we see the force being with the tenant and the buyer. I think that's going to be around for some time. The segment that we see with the most potential is the office segment. We're seeing the big corporates asking for a secondary location, trying to not have everything in a big ivory tower, but having multiple locations. So we see the office segment bouncing back. On the other end of the spectrum, we see the residential being most affected. I think the unemployment, people using their savings to get through this lockdown and this period that we're going through, I think is going to be significant, and it will impact very much the residential market.
No, thanks for that. Yeah, I think the trend again, as you've rightfully said, of centralizing and consolidating may be put on hold for some time, specifically to adhere to social distancing and probably bringing a lot more office space much closer to the place of residence of various corporates, to also find ways to reduce commute times and the likes. Kelly, from your side, I'm sure as a long-term investor, you've seen market ups and market downs, and you may be quite familiar to some of these uncertain, untraveled terrains. What are your views going forward, and how are you bracing for this?
Yeah, Patrick, just another webinar that I was on a couple of weeks ago, well-known writer Yuval Harari of Sapiens and Homo Deus was asked how is he going to see this as a historian, having tracked the development of our human race over 40,000 years. How are we going to view this? And another interview that I just listened to last night. Is this going to be just seen as another flu, another SARS COVID thing, or what? Obviously, the reaction has been a hell of a lot different to that. And are we going to feel the effects of something that we haven't had since World War II or the Great Depression? So my personal viewpoint is based on what they say, is that when we look back in 5 years' time, it will have been an event, but to what extent will it be a lasting event? Now, things that are going to affect us is our friend Simon there, who's from the banks and the funders. I do see that interest rates will stay low for quite some time. So that will take a lot of pressure off developers and the costs. So it will meet what Manuel has also said there, that will be a buyers and tenants market a bit, so that we will see returns coming down in most jurisdictions. Unutu for us there in Zambia, unfortunately, or I don't know about Gibson, but I think that already we've seen in South Africa, with rates having come down there with some relief. I see that happening for some time, and I can't see that the banks are going to become charging to the fore with pots of money to fund new developments. I think there's going to be a cautious, very cautious approach for a couple of years. So getting back to that point that Manny made there, supply will be quite slow coming on in the next couple of years, which will counteract what we're going to have. Getting back to space occupation, personally, I don't see it changing that dramatically. All the banks, just for example, and we have a couple of them that we developed for over the years, that have got 200-300 people in a bank building, in 4-desk clusters and so on. They've been through staff rationalizations over the last 20 years a number of times. They're suddenly not going to be able to do without those 200-300 people in that building. One only has to go to Standard Bank's headquarters there in Rosebank and just see the thousands of people that go in and out of there, every day. They're not all of a sudden going to have to disappear somewhere and so on. So they are going to come back to work, and there'll be a way through that. So I don't see it. I really don't see that changing dramatically. Our res situation in Botswana, I don't think there's going to be a massive change on that. I think that people will muddle through and manage, because the banks are not going to be able to repossess thousands of housing units for people that can't pay. They're going to have to manage that somehow through. Here, similar to what Manny's saying in Mozambique, our tourist industry has absolutely devastated. I just said to Patrick, I'm involved in a safari business, and up in Maun is absolutely terrible. The great thing is that the Okavango River is flooded all the way through, and the water's flowing, which didn't flow last year, but the cash flow has dried up. At the end of April in Maun, the cash flow dried up. So things are really, really tough there, guys, and there's probably going to be virtually close to zero income in those parts. So if you want to know how people are going to feel the hurt, go and see what those people are going to feel like with no money and surviving on food parcels. So that's that sector for us is going to take the rest of the year into the middle of next year to recover. But other than that, I would see in the next not too distant future, not totally back to normal, but generally it's for the masses of the people which we're talking about.
Yeah, I think one positive that has come out from this pandemic is the greater engagement between the various stakeholders in our industry in comparison to the financial crisis. For example, there's a lot more engagement now between the various stakeholders, which would hopefully reduce the blow that this can cause, because it started off as a medical crisis, which will evolve into a financial crisis. And as long as we all play our part in finding ways to reduce the financial impact that it could have, hopefully we can get closer to the new norm sooner than later. I would like to thank my panelists for taking time and for key contributions to this discussion. We had a host of questions that came through, but unfortunately we won't be able to entertain all of them. We'd also like to thank our sponsors and API for facilitating this webinar. And API is also reminding us that there will be a webinar on the 21st of May, where they will be discussing the impact of COVID in West Africa. Thanks to everybody, and have a great day further. Thank you.
Thank you.
Bye.